Hi, this is Brinton. I'm doing my professional presentation on loan sharking. Um, Now, I want to introduce this subject by giving a definition. I found this definition on the Merriam-Webster online. And what it is very general, it's very broad. It's someone who lends money to people and charges a very high interest rate. Now, a lot of people have the connection between loan sharks and mobsters or violent people, but that's not always the case. It can be anybody charging a high interest rate. Now, there are two types of loan sharks. There are violent loan sharks and there are non-violent loan sharks. Now, and I will get into that more in depth, but there are interest rate caps, and I will show the relationship between interest rate caps and loan sharks and the loan sharking population. Now, the history of loan sharks, show you exactly when it came into existence, and the laws and policies prohibiting loan sharking and loan sharking today. Now, I want to start off with a quote. It's, "The essence of loan shark deals is small amounts for short terms, with an effort to keep the principal out all the time to secure repeated renewals of the interest charge." Now that was in 1961 in Nayfield's Manual on Consumer Credit. Now I like to read about this because this is what shows that it's not just violent loan sharks. There's no mention of violence in here, and this is in 1961. Okay. Now the loan shark name is a slang metaphor. Basically, the loan shark has similar predatory behavior as a shark. It's also called predatory lending, is what a lot of people use today. There are expensive small loans that came into existence after the Civil War, and they started out with the chattel mortgage and salary loans. Now, that's whenever the Industrial Revolution came about, and a lot of people were working wages or salaries. And they could, and you know, there was a high demand for payday loans or salary loans or mortgage loans. So the usury, now there are usury laws in every state, but back then they weren't really considered a criminal charge or a criminal offense if anybody disregarded the usury laws. Now I want to tell you about the tactics of a loan shark. Now the tactics they can use are shylocking. Now shylocking is 6 for 5. It's $6 for $5. So I give you $5. I want back $6 by the end of the week. Debt trapping. Now this is one of the main goals of a loan shark, is to keep you in debt and keep that interest charge coming. Now they don't care really necessarily if you pay that principal back, depending on who the loan shark is. But they want to keep you in debt, keep that interest coming to where it's almost an annuity. Now, like I said, there are two types of loan sharks, non-violent and violent loan sharks. Now, both of them have a lot of similar characteristics, but I will show you the difference between the two. Now, the non-violent, they have no ties to organized crime. Both the non-violent and the violent keep customers eternally in debt, so interest becomes an annuity. Now, more interested in collecting interest and principal, and to compel repayment, they used to pester debtors, and at home, at work, make a scene, and also use attorneys to confess judgment in a court case for settlement or anything like that. Now, the violent, they do have ties to organized crime. Now, as you can tell, organized crime really didn't come about until maybe around the 20s. Or 30s or 40s, around that area. And they didn't really get into the loan sharking business until about the late 60s. But for repayment, they would threat them, they would use their body as collateral, or, friends and family members, something like that. So I got this from loansharks.com. The family boss would loan money to his capos, basically lieutenants, higher-ranking members of the business, and the capos would loan money to lower-ranking mob members, and they would be the ones that would loan the money to civilians. Um, okay, and I put this slide up here because, first of all, it's The Godfather, and it's one of my favorite movies. But as you can see, one of his best quotes was, "I'm going to make him an offer he can't refuse." Now, a lot of times when you make a deal with a violent loan shark, let's say a member of the mob, you basically have no other choices. You have to repay them. You have to keep paying the debt, or there will be punishment and something that you can't refuse. Loan sharks prey on desperate people with no other choices for funds. Now, there's always been demand for payday loans. Not everybody saves enough money to pay for their car damage or whatnot. There always has been somewhat of a demand for that. Now, and the loan sharks prey on these type of people because they know they're desperate and they know that they're their last choice. And some people don't want to use their credit. They know that they have bad credit, and this would be the perfect place to get money without using an official banking system where you'd have to use your credit. Now, laws and policies. Now, there are usury laws. There are state laws that create a interest rate ceiling on the interest rates in that state. Now, the Uniform Small Loan Law. Now, what this did was actually very good for the loan. It was very good to defeat loan sharking per se. So it was the first draft was in 1916, and it's an exception to the usury state law because the usury laws usually they price the interest rate so low that no legal business could make a profit without they couldn't make a profit without doing illegal stuff, because you can't make a $50 loan or a $500 loan with 7% interest. I mean, that's not enough to run a business. You're not going to make enough money. So what this did is it allowed it to be priced at a moderate level. Now, there are 7 drafts over the next 3 decades, so you can tell that they definitely are trying to close the loopholes, make sure that the loan sharking evolution does not get out of hand. And so interest rate caps. Now, Robert Mayer went into this. Now, he wrote a discussion draft. And in this discussion draft, he found that the total quantity of loan sharking has been reduced the most when interest ceilings are pegged at a moderate level. It is difficult for any legal institution, like I said, to be profitable when there are low interest rate caps. Now, this breeds violent sharks when interest rates are too low, because you have to go to somebody that will offer the money, and it's usually someone that's organized and can make sure that they get their money back, and that's usually the violent loan sharks. Now, unregulated interest rates, which kind of began a little bit in the 70s and 80s, they breed nonviolent and violent loan sharks, so it's very important that that they are regulated at a moderate level. Now, there are cases. Now, there's People versus Wheeler. Now, this one, I like to talk about these because they show exactly when and how violent loan sharks came about. Now, the conclusion to the 1913 Wheeler case, loan shark business consists of loaning small amounts to clerks and salaried employees at usurious rates of interest. Now, I like to note that he says to clerks and salaried employees. Now, that's big because people on a weekly paycheck, monthly paycheck, with the same paycheck, then they have no access to more funds if they need it. They're not saving enough or whatnot. And there's no mention of violence. Now, in the 1953 case, State versus Molitor, The conclusion was that they collect and exact usurious rates of interest from laboring people who are forced by necessitous circumstances. Like I said, go back to the desperate. The loan sharks, that's who they prey on. They prey on the desperate and laboring people who, get weekly, salaried, even hourly wage rate. Now, so you can tell exactly from 1913, 1953, there's no mention of violence. Now, in this 1963 case, McCarty versus New York Mid-Hudson Transcorp, the deceased was deeply indebted to loan sharks and was fearful of safety. Now, this really shows you that this is the first case that has a mention of violence. So there's really no connection between mobsters and the loan sharking business until now, until 1963. Now, modern day predatory lending, it's not as, it's more far-fetched. You don't really know it's coming. You have to be aware of these things. And according to loansharks.com, they use unfair loan terms, confusing language. They'll throw out, certain numbers like APR and anything that will just confuse you, make them sound smart, and charge hidden fees and high-pressure sales methods. Now, so if people aren't aware exactly of loan sharking, how it's done today, they can easily be caught up in being in debt and being trapped in debt because of high interest rates and not knowing exactly how they got into it. So now what modern day predatory lending lenders do is they target elderly, low income, minorities, or people with poor credit, because people with poor credit, they can't usually get a loan. So they need to get it from somewhere, and that's usually a loan shark. Now, they charge service fees or payday loans. Now, like I said earlier, payday loans and service fees, they could all be, scripted from just changing numbers around, and it looks legal, but really it's not. You need something that people definitely need to be aware of. Now, title loans. Now, people can, sometimes you might hear a commercial saying, if you trade in your title, doesn't matter how bad your car is, we're going to give you a new car, and here are the keys. Now, you'll be so excited about that you won't really pay attention to the interest rate that you're going to be getting charged in, which will continue into a circle of debt. And like I said, it goes back. They don't really care if you pay the principal back as long as you're paying that interest, and that's what the loan shark wants to do. Now, so in conclusion, people need to know that there are two types of loan sharks, violent and non-violent, and they need to know the difference and how both can affect them. There are laws and policies, and they should focus on reducing the whole loan sharking population, not just the violent ones, which most people think are just violent. There's definitely non-violent loan sharks out there today that use their understanding of the industry to get it without you being aware of anything. So interest rate ceilings should be set at a moderate level. There should definitely always be, we should always be evaluating certain loan sharking markets, see if they're being reduced, seeing if there's being illegal activity in interest charges, see if the usurious laws or criminal charges have gone up or down, and as well we need to be aware of loan sharking tactics. Always understand exactly what they want you to do and how they want you to do it in order to be aware and never to fall into their trap. So that's what I have, and my name